May 2024 CA Intermediate Advanced Accounting Question Paper. Detailed answer. This PDF link is also I have given in the description. You can see. AS 16 borrowing cost. Already this sum is there. One point is that interest income has to be deducted, and specific loan 14 lakhs you spent 4 lakh on April, August 10 lakh you spent. So timing factor, that is April to January, August to January end, December to January end, that timing factor will not be applicable for specific loan. For specific loan, you have to apply entire 10 months interest. So this 4 lakh you spent from specific loan, balance 10 lakh is also from specific loan. So entirely 10-month interest I am calculating for that. Totally I am getting 1 lakh 40. From this, I should reduce interest income received. It should not be credited to P&L account. Then capitalization rate should be computed for these two general borrowings. That should be applied with the timing factor for other two expenses. And depreciation should be provided from 31st January. So February, March, 2-month depreciation should be provided. That also computed. Then AS2 inventory, same as Paduka question. And this 8,000 is not relevant. The profit of 8,000 is not relevant. So what I should do now? First, I have to compute the joint cost. So total joint cost that I have to compute. In sale value proportion, I should allocate the joint cost. In that joint cost, I should reduce the NRV of byproduct and NRV of scrap. Both I have to reduce. What is the NRV? Market value minus cost of disposal. So cost of disposal they have given. Profit is not relevant. That should be allocated in this sale value of the units produced basis, and cost per unit should be computed, multiplied with the closing stock, you will get the total closing stock. Then internal reconstruction. Only one new point. The own debenture have been sold and cancelled. These two adjustments they have given. And for confusion, for confusing you, they have given interest is paid every year 31st March. You need not to worry about this because balance sheet is given on 31st March. There is no interest payable. So interest is already given on 31st March. On 1st April, this following reconstruction is going to happen. So there is no impact of come interest. Right? So don't worry about that also. So what is the entry for selling the debentures? Bank account data to own debenture, balancing figure, internal reconstruction. Like that, balance debentures were cancelled. Cancelled in the sense, 8% debenture liability side, one liability is there, own debenture asset is there. This both we have to cancel. So asset cancelled credit, liability cancelled debit. So that 10% debenture to own investment in own debenture, balancing figure, internal reconstruction. That's it. Then other things are same. So there is no entry for this interest. Okay. Then AS7 construction contract. In this, what is the special thing? No, nothing. Same. Only one thing. Year 1, 2, 3. That is the original question. Fourth year is also included. That is the only new thing. Okay. So you can refer to this in Paduka book. Here in year 3, variation is there in revenue and cost. So in variation, revenue la 400 plus 10, 410, and cost la 375 plus 7, 382. That's it. So with this, you have to compute that percentage of work completed. Then AS3 cash flow statement. This one new point, trade receivable gross value they have given and provision for doubtful debts they have given. So the difference of provision, that is increase in provision, non-cash adjustment, that you have to add to profit, and gross trade receivable. Please remember, balance sheet net trade receivable will be there, but I should consider total gross before deducting provision for doubtful debts. What is the value? That increase should be adjusted in adjustment in working capital. That you have to. Other things are same. Then accounting for amalgamation. Here also straight question. One more thing is here the profit in earlier question, profit will be separately given. Here profit they have given in the trial balance. This profit and loss account opening balance and profit for the year is given. So in this ratio, the equity share should be given. Preference share, equal number of preference shares. So 3,000, 2,000 should be given, and debentures should be given to the in such a ratio that income should be equal to 10% of the net assets. So this is already there. So here you have to take the revalued figure, but you should not eliminate the mutual owings for computing purchase consideration. After computing purchase consideration, for computing goodwill or capital reserve, you have to eliminate the mutual owings. That is the special adjustment. This concept is already there, so we have to apply here. And in this question, what is the adjustment for this? The trade receivable provision is given in subsidiary. In head office, it is not there. So you have to reverse the provision. If you reverse the provision, what will happen? Profit and loss account will increase. Trade receivable will also increase. So that is the first effect. And stock reserve. Stock reserve, holding company is selling goods to the subsidiary company. So subsidiary stock you have to reduce, and profit and loss account of the holding company, in that also you have to reduce the stock reserve. That is the one more thing here. And here normally revaluation gain will come. Here revaluation loss is there. So please take care there. So revaluation loss in the sense in the book value you have to reduce. Depreciation already provided is more, that you have to reverse. So normally gain will be added, additional depreciation will be deducted. Here reverse, ulta. Then there is nothing special. 6A will be normal as usual question. Here A is 20. A is 20. This question is also already there in the Paduka material. So first 50,000 equity shares, only 80 paid up. So in that proportion, if you convert, only 80% is paid up. So number of shares should not be 50,000. 80% of the 50,000 only we have to consider. And in July, remaining call was made. In that also 10,000 shareholder, they have not paid that 20 rupees. So 10,000 80% and 40,000 should be considered as total. So 48,000 only it will come total. So 48,000 9 by 12. Then other things are same. Basic and diluted EPS we have to compute. Then in this question also, the rate of the declaration of dividend if you are having loss. So if you are having loss, that loss should also be taken over. So first two conditions are satisfied. Here if you withdraw 10% dividend of 50 lakhs plus loss, 55 lakhs if you withdraw, the balance will be falling below 15%. So you cannot take that. So how much you can withdraw? Balance required is 75 lakhs. That is 50%, 15% of the 500 lakhs paid up capital. So already existing balance 100. So 25 only you can take. $25 lakhs you can withdraw. In that 5 lakh current year loss will go out adjustment. Then 20 lakhs can be declared. So if you declare 20 lakhs, now the percentage will be 4%. And here branch accounting, last question. In that everything is straight question. The inventory of P and Q, that is we have to convert into the foreign currency and that the exchange rate and all they have given. So first you have to compute the cost and the net realizable value. Whichever is lower, you have to value. So stock should be valued at NRV. Stock P should be valued at NRV. Q should be valued at cost, whichever is less. So that is the only new thing. Thank you.